He's Senior Vice President of Ave Maria Mutual Funds, the largest family of Catholic mutual funds in the United States. And he's here tonight to discuss the current state of the U.S. economy, high inflation and interest rates, and morally responsible investing. Would you welcome to the program Bob Schwartz. Bob, thanks for being here. I'm used to seeing your dad, so it's nice to see the younger Schwartz coming in.
Thanks so much, Raymond. It's great to be here.
We're replenishing the panel here. We are here in mid-2026 with markets that have in some ways defied gravity. I mean, S&P earnings are holding up, at least on paper. What does the economic picture look like to you now? And what's the general health of the U.S. economy?
The U.S. economy is strong. Corporate profits this year will be up 15 to 20% over last year, and up another 12 to 15% in 2027, based on early forecasts. Really? And as our friend Larry Kudlow says, corporate profits are the mother's milk of the stock market and the lifeblood of the economy.
To what do you attribute that? Demand?
Yeah, demand, surprisingly resilient consumer, and consumer sentiment has been positive. The market climbs a wall of worry. It always has.
Let's talk for a moment about market asymmetry. Now, this is the idea that good news in the market tends to arrive slowly, quietly, while bad news kind of strikes all at once and everybody goes into a panic. How does that pattern shape the way these markets actually behave? And what should an ordinary investor understand about that asymmetry?
It's a great question. There's a lot of psychology in the market. There's a whole area of study called behavioral finance that focuses on psychology. Two of the biggest emotions that rule investors are fear and greed. Warren Buffett, maybe the greatest investor of the last century, says be fearful when others are greedy and greedy when others are fearful.
Interesting.
So the serious investor should be long-term oriented. The market out of the last 100 years has been up 3/4 of the time, 75% of the time, the market is up. And it's a gradual climb. Sometimes it's lumpy, there's volatility, and the market has averaged 10% per year over that 100-year period.
Yeah. Talk to me about behavioral finance for a moment. Essentially, this amounts to the way people become their worst enemies when they're investing. You talked about it a moment ago. What are the most common behavioral traps that investors fall into, or that you've seen investors fall into?
Yeah, the first one is loss aversion. People view losses twice as negatively as they view gains. So there's a fear of loss, even despite those statistics, with the market being up 75% of the time, with the long-term average being 10% per year. So loss aversion is one. Another trap is overconfidence. People think they have a little insight into a company or a little insight into an industry, and they day trade or trade excessively based on their perceived information instead of relying on professionals. So overconfidence. And the third one I want to highlight, I think is most relevant right now, is kind of a herd mentality. We've heard a lot of talk about the Magnificent Seven, and the AI trade, and it gets a lot of press on the business news, on the Wall Street Journal. The top 7 companies, the Magnificent Seven, make up over 1/3 of the S&P 500. It's unbelievable proportions.
But there are openings here. I mean, there are other companies that sadly don't get that kind of attention, that are actually foundationally sound, have a great plan going forward, and a real market base. Why aren't they getting the attention, and how do you take advantage of those smaller, less flashy opportunities?
Yeah, absolutely. The market leadership has been narrow recently, but we think it's broadening. It's going to expand to those companies you're talking about, smaller cap, mid-cap companies.
Didn't you all you opened, Ave Maria has a new fund?
We did, yes, Ave Maria Mutual Funds. We launched a new fund on May 1st, the Ave Maria Undiscovered Fund. It was in coincident with the 25th anniversary of our funds. And that new fund will focus on these broader opportunities.
Now, tell people who aren't familiar, the cool thing about Ave Maria Mutual Funds is you actually apply Catholic principles to the investing, so that things that are immoral or lead to morally irresponsible ends you don't invest in, which still leaves you a lot of investment. But Uh, why has that been so successful? Some people would look at that and go, wait a minute, you're taking these really lucrative things off the table if the bottom line is what you're after.
Yeah, it's a great question. For Catholic investors and other serious pro-life investors, we offer an alternative that allows folks to invest in accordance with their strong Catholic pro-life beliefs. So we screen out companies that are involved in abortion, pornography, embryonic stem cell research, and companies that contribute corporate dollars to Planned Parenthood. And it eliminates only about 5% of the Russell 3000. So
Really?
it leaves us with plenty of good investment options, plenty of good stocks across our family of 8 mutual.
Yeah, because I mean, you're applying your expertise as investors and investment managers, and using that. You have a board that screens out those morally aberrant investments. And then the other thing is you use your place, your stakeholding in these companies to adjust their behavior if you can.
Absolutely. Every time we buy a stock, we send a letter to the CEO of the company saying that we bought the stock because we think it has great financial potential, investment potential, and that company does not violate those core Catholic principles. And if they choose to change their policies and violate those principles, we'll sell the stock. And we've had to notify a few companies over the course of the last 25 years when really? That has happened.
That they just weren't responsive, and so.
Well, they became an offender after we bought the company. So we sent the CEO a letter saying we previously owned, 200,000 shares of your stock, and we sold it because you acquired a company that was doing embryonic stem cell research or whatever the issue was.
I got a call the other day, a friend of mine who's been now really into crypto, and says, look, get in now, put a couple of $1,000 into crypto. This is going to explode. First, explain to people what crypto is. I mean, my problem with it is it's nothing. It's a code. It's not based on anything. So I do worry that, like gold, I mean, gold is an actual tangible asset that has value in the society. What is crypto predicated on?
It's a great question, and I'm not an expert on it, but I agree with you. I'm very skeptical of the whole arena. We don't invest in it in any of our funds.
No cryptocurrency in your portfolio.
No cryptocurrency at all. The technology behind it probably has relevant applications that will withstand the rise and fall of the literally hundreds of different cryptocurrencies. But we stay away from it. It's very speculative. It's not an investment in our book.
Yeah. What do you look for in an investment? I mean, I know, you all, I know, always talk about risk and diversification and how you can ameliorate the risk by diversifying. But you would say that's too risky an investment for you and your investors.
Correct. Yeah. We look for companies that have rising earnings, rising dividends, low debt, companies that have staying power, pricing power. There's a lot of talk about inflation, companies that are able to keep up with inflation, grow their earnings, and grow their dividends over time. Those are the types of stocks that rise in price.
How did the Schwartz family get involved in the Ave Maria mutual funds? Tom Monahan and Bowie Kuhn, the former commissioner of baseball, came to you all 25 years ago, I guess.
Yes.
And who recommended an investment fund, that would be a good idea?
Yeah, Tom and Bowie came to my dad, just over 25 years ago with the idea. And I got to spend a lot of time with Bowie, the late Bowie Kuhn, and I get to spend a lot of time with Tom. They're two of my heroes, along with my dad. Yeah. And they really were trailblazers in establishing the first Ave Maria Mutual Fund in May of 2001. And it's been quite a ride over these last 25 years.
What have you all learned over those 25 years? And what did you and your dad not expect when you began this all those years ago?
Yeah, the plan originally was just to launch a mutual fund, and early on, investor demand was so strong that they wanted funds to meet different investment objectives. So we had a value fund originally, we added a growth fund and a bond fund 2 years later, and over the next 22 years, we've added 5 more funds. And every day we're meeting new investors that are learning about our funds and grateful that we exist.
Well, it's rare to find people who balance not only the well-intentioned desire to have a morally responsible investing portfolio, but have the expertise in the raw data and the understanding of the marketplace, that you can make that worthwhile and really valuable to investors in not only feeling good about what you're doing and acting in a morally responsible way, but bearing the profits and the dividends from that investment.
Absolutely, and it's critical to have a long-term perspective.
Yep.
Investing in the stock market isn't for everyone. Some people are too fearful that they'll lose money. But if you have a long-term investment horizon, diversified portfolio that's professionally managed, it's a great way to accumulate wealth.
Excellent. We will leave it there. Bob Schwartz, as always, and find out more about the family of Ave Maria Mutual Funds at avemariafunds.com. Thank you, Bob.
Oh, you're welcome. Thank you,
Great
Raymond.
to see you.